All right, guys, so I'm getting this video out early because I got family coming and visiting in just a few hours, but want to get this video out to you guys. So, weekly watch list for this week. I don't really have a watch list. I think the main point of this video is to say cash is a position. Okay, so we take a look at SPY and we can see here. We've gone from a green trending market to a yellow trending market or a yellow. So this is telling us like, just think of it like a stoplight when you're driving, right? You got red, which means stop, meaning stop buying longs, or you can look to go short. You've got the yellow, be cautious on either side. We don't really have a clear direction right now. And then green, which is continue going long, continue ahead, right? Um, and we've had this position here where we went from red to green or to yellow to green and have been trending. And we've got a few times where we've gone from yellow to green. But I mean, really, the main point is you have plenty of time when it flips back green to be able to get into long positions. And if it remains green, we caught some good buy positions here when it remained green on this day. Um, so this is our major market indicator. So like telling us, hey, how should we be positioned in this current market environment? What is the market environment? And I think this is the most important tool out of anything. Like the buy signals get us in and they tell us good buy points, but uh, knowing the market environment is kind of unmatched. So you can see here, uh, we can do some analysis on SPY. And that's probably where we'll spend most of our time because there's not really charts setting up. When you're taking a look here, you can see this is the past year worth of action. So you'll see these periods of time. So just do analysis on what has been shown before. These candles show up for the same reasons every time. So you can use the historical analysis to understand why they're showing up that way. So you can see here, we were green, we went to yellow, we hold to 50, then we went back green, trended for a while, then we had this big sell-off candle, which was FOMC, and then we went into a bearish trending market. Then we flipped back green, made a couple new all-time highs, and then we went yellow and then back to red, and then now down strong downtrending market where there's absolutely no reason to try and be long. Okay. And then same thing here. We get a pullback, we get yellow, kind of mixed stuff going on, but we had sell signals. And then we got that red flip, and then we had this big panic sell-off, which took us down 15% in about 6 sessions. So then we had our bounce, we had a reversal signal, and then we had green or yellow trend bars flip after this higher low. Then we flipped to green. And so now we've kind of just been green, smooth sailing all the way through. If we look at the cues, um, we are flipping to yellow as well. So we just need to be really cautious here. So keeping an eye on this. Oops. Thought that looked a little different. Yeah, there you go. So you can see here we flipped to yellow. So we've had a couple times where we flipped yellow in the past. We were yellow here, but we flipped back green. We were yellow here, we flipped back green. We were yellow here, we flipped back green. I think SPY is the more important chart because when we take a look, we can see we have tested the 21 EMA. One, two, I won't count that one. Three, four, five times, 6 times, and have held each time. We had one close below, but we reclaimed it very quickly on the next candle. So Monday will be very important. Are we going to close below the 21 EMA twice? Because that has not happened in this rally yet, and that would indicate to us there's some sort of change. So Monday, I think, is a wait and see type of deal. Then we zoom out here. We're very close to the weekly 9, which we've only tested once in this run up. And usually, pretty commonly, you're going to see us pull back to the weekly 9, even more commonly, pull back to the 21 EMA. You can see through this whole rally here, pull back to the 21, 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 and then we finally lost the 21. We got red candles and then had this sell off. So if we go back even further in time, we can say, okay, how did it act after this COVID sell off? Well, we pulled back to the 21 pretty early. We pulled back to the 21 pretty early. We pulled back to the 21. We held the 9 here and kind of grinded higher, pulled back to the 21, and then accelerated higher. Pulled back to the 21, made a new all-time high, and then we moved into bear market territory. So, in red candles, we went to yellow, then we went to red, and then it was downtrending market from there, right? So, um, what is this telling us? Well, most of the time, we're not holding that weekly 9 like in leading stocks we typically might see, but we typically like to pull back to the 21 EMA. So or at least within that 21 EMA and 9 EMA range. So what I'm looking for here is I think we can see personally, I think we may pull back all the way to the 21 EMA. And we're just going to use these trend bars to tell us the story. And right now, we've got a yellow neutral caution signal. So what that's telling me is, hey, you're in a good spot to be cash right now. And that's what we are. We're cash. We took profits on Rocket Lab earlier this week. Granted, I took it on this day right here. I took profits, which ended up having a much bigger move after that. And it still looks good if you're long, as long as it holds the moving averages. So we took profits there. Oscar, we took profits on Oscar right here. Or wait, on this day when we gapped up, we took profits. 23.14 was my fill where we sold. So that was a pretty good exit there. Um, and then we had Lemonade, which took this one on the breakout, got a nice push, and then got stopped out of that one for -2%, I believe. And then we had AAOI, and this one broke the resistance here at around 32.50. Got a nice push and then stopped ourselves just below break even. I think it was a 1% loss. And then might be missing one, but oh, UEC, we closed for break even on this day right here. We got a little bit of a push and then closed for break even. And then last trade was SoFi, SOFX, the leverage ETF. Took the breakout on this day, went up 3R, trimmed some, and then stopped the rest out for break even. And I'm glad we did because we had this pretty nice flush after that. So this week was a lot of like the stuff I was already in was working. But I was feeling like the market was coming into a topping point. I was a few days early. I took profits on the positions I had. Tried to initiate a couple different ones just to see to kind of gauge the market, see if we're pushing or like work breakouts are still working in leaders, which they weren't. SoFi, we had a nice push. It didn't follow through. It stopped us out at break even. So that's very telling. Okay. Palantir was one on my radar for quite some time, all week. And we just never could get that breakout or a trigger for an entry. And so this one was fading. Lemonade, this one tried to break out and it was fading. AAOI, I mean, when you have a move like this, typically you're going to see a continuation after it tightens up. This one here, it couldn't follow through. So what is all this telling? Well, nothing was following through. So it gave me one, I felt like I needed to go cash, so I did. I was too early on Rocket Lab. I had great timing on Oscar, which in the end, it ultimately costed me negatively because I was looking for more of a push. And or well, I was looking for a sell off almost immediately on SPY on this day here. This is when I went cash, and then I tried a couple other positions. They just didn't work out, which is fine. Um, or it didn't like SoFi worked out, but it didn't give me the move I wanted to see. But then we got the sell off, and so something that was telling me was one, we were getting super choppy in through here. and then we're kind of just grinding higher. But then also breakouts were just having the breakouts and then failing, having the breakouts and then coming back to break even. Like, so that's telling me, okay, the market environment's changing. I definitely need to lighten my load. So then sure enough, we had the sell off with the news. But that was kind of telling even before it all happened, right? So with all of that being said, SPY, there's no reason to do anything. Like I think the first thing we can do is either look for some sort of daily signals to trigger us, and meaning like here. Hold on. So maybe some sort of, sorry, I gotta fix this. Maybe a flip of moving averages. So, like for example, in through here where we had this pullback and we had red trend bars, and then we flipped back to green, and we started trending higher. Same thing here where we were red and then flipped back to green, and started trending higher. So that's what I would initially be looking for. That's kind of the first thing. And then as for, or you can just simply stay on that daily time frame, and if it flips red, that's a bearish sign, so on and so forth. But we can use like this 1 hour, 30 minute, whatever you prefer. This is a really easy way to do it. You can see we go to red, we flip back from yellow to green, and then we have a good trending environment. Red to yellow to green, we have a good trending environment. And then we flipped red. You definitely should be cash there. And so now we can use a daily time frame as well. So moral of the story, sit cash. I'm going to be sitting cash until I get clarity, meaning I either want green or red trend bars. And then once I get those, I can start making some moves. The only thing I've seen that is kind of setting up is Sezzle. So this one had this big gap down and had some sell signals into Friday, which wasn't on my radar, but we broke out below 80, and now we're starting to see some selling. If you see some volume coming into this on Monday, and we break like the 77-ish level, I think that this thing is probably going to head right back to 60. So I think this one is one that we can pay attention to into Monday. But that's really the only thing I'm seeing at the current moment. And I think honestly, the better answer is to stay cash and wait for SPY to give us the next direction. But all right, guys, I hope this helps. Thank you guys for watching. One takeaway from this is uh, all these different things are important, but like behind risk management comes to market environment. Like market environment is that most thing that's overlooked, because people will think, oh, I've got trading down all through here. I've seen it everywhere. They're like, oh, I finally became profitable, or oh, I've done this. But then they end up losing their money in periods like this. And you got to be paying attention to the market environment, and it's clearly shifting. So just wait for clarity. So, all right, guys, thank you guys for watching, and I'll talk to you soon.